Hi there, AT&T has recently reported the results for the first quarter. As you can see, the stock price has declined by over 40% from its peak. But if you look at their latest results, you will see that they made around 4 billion in free cash flow, and they expect over 16 billion in free cash flow for the entire year 2023. And as the market cap is around 100 billion, the stock price seems undervalued at the current level. Moreover, AT&T is paying a nice dividend, around 7.4%. So that's great for dividend investors. Now let me show you why I think the stock price is undervalued. First, if you look at the analyst estimates, you can see that the revenue is expected to increase from 120 billion to 128 billion by 2027. And their profits are expected to rebound from a loss of 8 billion to a profit of 16 billion in 2023 and 18 billion by 2027. So that's great. Also, the management said that they expect around 16 billion in free cash flow or better. Moreover, their dividend is expected to be sustainable. So this high dividend of around 7% is not a trap. The analysts expect $1.12 in 2023 and then an increase to $1.17 by 2027. That will be a dividend around 7.9% at the current level, $14.80. And if you look at their latest results for the first quarter, you can see that revenue was up almost 1% year over year, and their free cash flow, as I said, was around 4 billion. Plus, they are confident that for the full year, the free cash flow will be around 16 billion or better. And they are focused on growing the right way, adding profitable 5G and fiber customers. As you can see, their phone subscribers have increased from 68 million to 70 million year over year. And also their fiber subscribers has increased from 6 million to over 7 million. So it looks great. All the numbers are improving, but the stock price is still down, more than 20%. And their capital allocation is that they expect 11 billion in free cash flow for the second part of 2023, 5 billion will be used for dividends, and 4 billion for debt reduction. Maybe you know their total debt was around 143 billion, and their net debt was 142 billion. So they have some debt. Now, as you see, the business is doing great right now. The numbers are improving. Of course, there is also risk. First, dilution. As you can see, the number of shares has increased from 4.6 billion to over 7 billion in the last 6 years. And if they continue to issue more shares in the future, then the value of this business will decrease even more. I don't expect a lot of dilution, only if they face problems with their huge debt. That's why you have to track the number of shares, to see if they issue too many shares. And the second problem, as I said, is their huge debt. As you can see, the debt has increased a lot, and now they are trying to reduce this pile of debt. As I said, their net debt was 142 billion. And these are the main risks with this business: debt and dilution. Now let's see the fair value of AT&T. First, the risk. For a 10% annual return, the fair value may be around 90 billion. By the way, these are the analyst estimates, the future earnings, what the market expects. So as the market cap is around 106 billion, the risk is quite low. Now if you want the fair value per share, is around $12, and the stock price is around $14. So the risk is not that high. Of course, if they face other problems, they have to invest more in infrastructure, and they have to reduce this dividend, then the stock price can decline even more. The market cap can go down more than 90 billion. So you have to be aware of that risk. I don't think that will happen, but you never know. And the great scenario, or the reward, the fair value will be around 146 billion for a 10% annual return. So if the market likes this business more in the future, the stock price can rebound and the market cap can go to 146 billion. And you still have a return around 10%, as they are paying a huge dividend of 7.4% plus an increase in their earnings. And the fair value per share would be around $20.50. And now the stock price is about $15. So it looks quite undervalued. In the normal case, the fair value will be around 124 billion for a 10% annual return. They may have a slower growth rate, but still at the current valuation, the market cap is undervalued. As you can see, the fair value per share will be around $17 and the stock price is $14. So the current level, I expect that the stock price will increase. It might go to $20 or even more. Plus, you get a nice dividend around 7%. Now, it also depends how you want to invest. Because if you plan to hold this stock for the next 10 years, then the risk of debt and dilution may happen. And the stock price may go down. And the dividend may be reduced. But for the next 3 years, I expect the stock price to rebound. And you also get a nice dividend around 7%. It won't be a huge return, but if you are pleased with 30% increase in the stock price, plus this dividend around 7%, AT&T can be a good investment at the current level. If you want more than 10% a year, then you have to find other investments or wait for another decline. And if you have any questions, please let me know in the comments.